to the Trading Market Technicals Morning Call video for Friday, August 23rd. Markets were green across the board. Dow Jones up 66, NASDAQ up 38, S&P up 14, Russell up 14. Very unusual situation happened yesterday. Everybody I'm sure knows about. The NASDAQ went down around 12-ish and didn't open until 325. And to be honest, we were looking at a real decent day yesterday morning, and I thought we were going to have a pretty good push to the upside. And when the NASDAQ went down, the other markets, as the Dow Jones and the S&P and the futures, were just literally just grinding higher slowly on no volume. So the day was pretty much shot at around 12 o'clock. And that's discouraging because we did have a nice big bullish move in the morning, and I thought we were going to get a good follow-through in the afternoon, but obviously everybody waiting around for the NASDAQ to open and didn't do so until 325. So anyway, that does happen. Technology, unfortunately, it's just surprising that with our new technology, what we have today, that the NASDAQ can actually go down. It's just incredible. But anyway, back to the markets. I have some stuff I want to show you. Now, I'm looking at this bounce that we're looking at. That we've been talking about, I do think that this bounce will probably get sold into because it's not a big, strong bounce that I would say this has a lot of conviction behind it. And it's only been really a day. We had a bounce beginning of the week in the morning, then that sold off. So that just tells me that there's a lot of sellers looking to sell into any bounce. So we're going to just make sure, obviously, that the market's that's really what's going to happen. But in the meantime, I want to show you some stuff that I'm looking at. But right now, as far as the bounce, I think the bounce may continue. Now, it is Friday. It is the end of August. And usually what happens, if there is no major catalyst, the market usually grinds higher pretty much most of the day. So if you are trading today, I'd say you have about 2.5 hours in the morning and then pretty much wrap it up and go play golf because it's not worth really staying at this time of the year. The last 2 weeks of August and the last 2 weeks of December really is a good time to spend time with family and friends. So anyway, let's get back to the markets, and I wanted to show you a few things. And this is a couple of things here. The NYMO did bounce up, but again, guys, right, we have more room to run to the upside. And I like the fact that I think we get a little bit more follow-through, and I'll show you some of my upside targets, what I'm looking at before the markets roll over at least one more time. I think going into September, remember, we do have seasonal weakness now to the end of September, the first week of October. Okay, now obviously that could change, but if history were to repeat itself, and you look at the Traders Almanac, you'll see that I think 58 or 65% of the time we're actually weak, and rightfully so, because of the crashes that usually happen in October. People get a little weary and they start taking profits, and that's really what comes down to it. But anyway, let's take a look at the NYMO as I showed you. Here's the bullish percent, and as you can see here, we are still on a sell signal, and we have a way to go before this can turn positive again. So my guess here is telling me that we rally into a retracement rally into this zone, and then we fail again. And that's what I'm probably looking at for the markets in itself. Stocks above the 50-day moving average, as you can see here, very, very weak. We just didn't even cross through the 8 EMA, so we're still below it, but we did pop up to it. So that's also giving me a sign that this bounce is weak and that we should sell into it. Take a look at the VIX. And yesterday I said we had a sort of like a blow-off top, but we closed outside of the Bollinger Band. If we close inside the band today, which we did, that produces a buy signal for equities and a sell signal for the VIX. And you could have played the VIX. If you played it early enough, you would have made some money in it. The thing is that the markets opened and they rallied a little bit. We sold off, and pretty much the VIX didn't sell off that much. So that's telling me that there is a little bit of fear, right, in the markets, but not as much as you'd like to see. So people are still pretty much bullish overall in the market. And, you know, I would like to see the VIX did pop up, but again, we had that long-legged doji and came back in again, so we held that 50 and 200-day moving average. So we'll see if it starts to break down again. You could have played that VIX to the short side. Now, if you look at the CBOE, it's telling us nothing more than just neutral. We are in this sideways consolidation pretty much half of July and all of August. So, again, no fear yet in the marketplace here. So, it's a kind of wishy-washy analysis here with the put call and the VIX. Now, let's take a look at a couple other things here. Let's take a look at the dollar. And then I want to get into a couple of currencies I want to show you. Now, the dollar is holding in nicely here, as you can see. We're still below the 200-day and the 50, but we just closed at the 200, but still below it. Now, if the dollar, this is what I'm going to be watching for the coming days and weeks, if the dollar can pick up momentum to the upside, then I think you're going to have some big movement in stocks, commodities, and Forex. And remember, I like to look at other key asset classes to see and get clues of what's happening, overall in the big picture. And if you look at, and I showed this to you many times, look at some of the majors. We are sitting since February, March. We have been. This is the pound dollar. We have done nothing but consolidate, just chop around in this range, right? Here's the dollar CAD. Same thing. Now this is just kind of taking this out, but it's still within its range here. Here's the euro dollar, which I like this this pattern. I like it to be a breakdown here or here and then fail. But again, in a big range. Here's the dollar yen in a range. So what tells me is that if the dollar starts to break out, a lot of these other pairs will start making some big moves and money will start rotating into different asset classes. And that is what you want to see. So pay attention to the Forex markets as well. Keep an eye. You don't have to trade it, but just pay attention to it and get some really good clues of what's happening here. It's really important. One more thing I wanted to show you before we go into the chart segment. Here's the XLF with the bullish percent financial index, right? So now and I said, guys, watch the XLF because Goldman had a nice bounce yesterday, and I mentioned that would be a logical place for a bounce. Bounce was the 61.8% retracement, which we had a nice day in Goldman. I'll show that to you again in the charts. But now the XLF is starting to pick up a little bit to the upside here. Now, and a lot of the other asset classes and a lot of sectors have been doing what it should be doing, leading to the upside. Now, that's why I think we get a little bit more of a bounce here. But keep an eye on the XLF and look for some of the strong banks, because when the market does rally and we get a decent rally, at least even if it's a good retracement rally, you can make some good money on these banks because they have been battered and they've been beaten down a little bit here. So let's get into the chart segment now. Okay, so here is the S&P cash. We didn't quite have an outside day, but we did get a good push to the upside, and we're still below the 50-day moving average. Now, the CCI is now starting to curl back up again. I would like to see 1670, 1660, between 1660 and 1670, no more really right about this area here, to get a nice good rally and then fail. Okay, now obviously we can even get to 1675 if we had to, and then fail. Back test this long-term uptrend line from 2012 lows, and then fail. That would entice me a little bit better. And then obviously we would need to take out this pivotal low of 1638. Okay, so these are the numbers. If you follow in the cash, what I'm looking for. Here's the 60-minute, which I've had here for the last week. Now, the first target was met at 1638. We did get the first downside target, but that's shallow. I do expect a deeper downside retracement, correction, and that would be really down to the 1618, 1620-ish area, which would come right around this area here. Okay, and that's the 61.8% retracement off the high and the low, which would be right in this area here. So this is really what I'm looking for a good downside target. And again, you can't outrule that this June 24th low cannot be touched. I don't think it'll be breached, but it cannot be touched. That's a little bit far away right now, but I just wanted to tell you I'm really looking for this area right in here, 1618, 1620-ish, for the next target once this retracement rally is complete. Okay, so the spiders. We did get right around we're right in between the 50% retracement from the high to the low, and I would like to see this kind of get back into the 20-day moving average, kind of fill this gap area or get close to it as the 20-day is starting to curl down. But you can see the 20-day is rolling over. The 50-day is starting to roll over. That's telling us prices are starting to roll over. And again, prices just do not go straight down and or up, but you could see that prices are rolling over. It's going to take a lot for them to curl back up again. So that's why I like the fact that we can get into the 167-ish, 167.50 right up in here, and then fail. And again, when I mean fail, meaning that we put a reversal candle, take out the previous day's low. That's the trigger to get short the market, not just because it touches the price area. Okay, as you can see here, MACD stochastics are rolling over. They are deeply oversold. That's why it would be a logical place for another retracement rally, some follow through. Now we're down. We were down about 2.5 in the early morning session while I'm recording this, right around 4:30 in the morning. Now they just kind of popped up, and they're basically flat, down 25 cents in the electronic session in the minis. So let's just see what happens here. But it does look enticing for a follow through day today. Here is the 30-minute, as you can see here, had a little bit of a pinch in here, kind of just consolidating here. So really today, I want to see yesterday's high get taken out. It's 166.33. If yesterday's high gets taken out, I'd definitely be looking for some higher prices today, guys. Okay, now here's the diamonds. Now the diamonds didn't really do too much of anything. This is very weak here. We need to see this take out the 150 and then start breaking back above this other, the secondary long-term uptrend line from the November 2012 lows. But at the very least, if we can get back in here and start to back test this and fail, the Dow Jones is definitely the weakest sector that we follow. No question about it. Now, here's our leader. Now, our leader's doing its thing, right? It's leading. We actually we had a big pop to the upside, caught the uptrend line from 2012 lows, and now we want to see some follow-through. Again, one day doesn't make a trend. However, this is encouraging for a further upside retracement rally. Okay, so that's why I like to see, and I still think that we get some sort of a bounce here, and then fail. Okay, now we also have the IWM's secondary, our second leader, which is actually doing its thing. Took out the previous day's high, outside day reversal, and we are now going to probably test the 20-day moving average. So this is another reason why I think that we continue to move to the upside. Now again, anything could happen. Just as exactly what I'm showing you is what I feel, getting the data from the charts. Here's the SMH, and this is what I like to see, a little bit of a back test, right, and see what happens. Then go into the sector. And this is really what you should be looking at if you want to find trade ideas. Go into the go into the ETFs and go look for stocks that, if the ETFs are starting to roll over or starting to bottom, then go into that ETF, go into the components and look for the strongest or weakest stocks depending on what your thesis is, a long or short idea. That's really what you want to be looking for. Now, I like to get this back test here and then fail, and then I'll be looking for the weakest semiconductor in that ETF. Now, here is Goldman, and I mentioned to you here, and that's why Fibonacci retracements are really, really nice, especially when you have a whole lot of stuff going on. Where is a logical place for a bounce? Well, 61.8% retracement came right in here at 157.23 in Goldman, and what happened? We bounced. Not that it's a great big bounce, but it was a couple of points. So if you were following the analysis and you wanted to get long Goldman, I would be looking at the 5-minute chart, and then you could have looked for an entry and you got it long. Now we're still below the 50-day moving average. Goldman needs a little more follow through, and that would also help all of the banks out as well. So keep an eye on that. It's something interesting to follow. Here's the XLF, as you can see here. It's just ticking right below the 50-day moving average. We did take out the previous day high, but ever so slightly. So I like to see another pop to the upside. And again, maybe we back test, we get to this horizontal support, now resistance at 2035, and then fail. So keep an eye on the banks. There's something that you might want to definitely want to keep an eye on for some clues that we are, starting to move higher. And as you can see here, look at the MACDs and stochastics. They're really just getting pounded here, and they are oversold. So again, a logical spot for a bounce. Here's Apple. Apple was selling off, and then we had the Carl Icahn pump again via Twitter, telling just incredible the way the market works nowadays. Now, Carl Icahn had mentioned, spoke to Tim Cook, having dinner in September, and he likes the idea of a buyback. I mean, that's just totally crazy. I don't even know if that's illegal or not. To me, it doesn't sound right, but nonetheless, we did, after when the NASDAQ opened, Apple actually recovered some of its losses. So let's keep an eye and see what happens here. I think that a good test at a 480-ish area would be logical, and then of course it breaks there, and then a 200-day would be the next target in Apple. I don't think Apple just rips right up to 518. Now it might, right? If we get Carl Icahn to continue to voice his opinion on Apple, then possibly so. So right now we'll just keep an eye on it. But again, when you get these activists in the stock and they keep trading, it's actually very dangerous. Like, you really don't want to be looking to short the stock, and you don't want to be looking to get long. I usually tend to stay away. Just not worth it for me. And lastly is the Qs. Qs had a nice little day, this horizontal channel. And that's why I said, guys, you know, a lot of people, oh, could this be a bear flag? Not really. It doesn't have the price action going higher, low, higher, low, higher, low, trending up. It's totally sideways, so I look at this as a definite channel, sideways channel. Now we can probably end up filling the gap up in here into the Qs on this retracement rally. So we'll keep an eye on it. Keep an eye on things. All right, everybody, have a great weekend. It's going to be nice here on the East Coast. Enjoy with family, friends. Head out to the beach, and then we'll speak to you on Monday with a full report. Have a great day, everybody.